and gentlemen, good day and welcome to Cipla Limited conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ajinkya Pandarkar, Head Investor Relations from Cipla Limited. Thank you, and over to you, Mr. Ajinkya.
Thank you, Zico. Good evening and a very warm welcome to Cipla's Q2 FY24 earnings call. I am Ajinkya Pandarkar from the Investor Relations team at Cipla. Let me draw your attention to the fact that on this call, our discussions will include certain forward-looking statements which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectation about future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Cipla does not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmation, future events, or otherwise. I hope you have received the investor presentation that we have posted on our website. I would like to request Umang to take over, please.
Thank you, Ajinkya. Good evening to all of you. I thank you for joining us today for our second quarter earnings call for the year. In quarter 2 of FY24, we have continued the trend of strong performance, and we have recorded our highest ever quarterly revenue at 6,678 crores with a year-on-year growth of 15% and an EBITDA margin of 26%. This was made possible through double-digit growth across our core markets of India, North America, and South Africa. In our One India franchise, I'm pleased to share that the franchise has yet again posted a healthy year-on-year growth of 10%, despite a weaker anti-infective sales and a slower consumer growth for our CHL business. This growth was largely supported by continuing faster than market growth in branded prescription, where we grew at 11% against the IPM growth of 10% as per IQVIA MAT. The share of chronic therapies in our portfolio has improved by 140 basis points year-on-year to 60%. Trade generics consolidated its leadership position in the market. Despite the season which continued to be muted, GX posted a strong year-on-year growth supported by performance across realization, volume, and a lower cost of goods. Our generics business has embarked on a journey of constant evolution through new product introductions, leveraging partnerships with our associate company GoActive, and deepening our distribution network. Our priority has been to grow our big brands across all the branded prescription and the OTC businesses. In India, branded prescriptions, we have 22 brands with revenues over rupees 100 crore as per IQVIA MAT September 23. Our leading inhaler brand, Foracort, is one of the fastest growing amongst the top 10 IPM brands. Trade generics now has 7 brands over 50 crores in the trailing 12 months. Cipla Health derives its growth from 5 brands which are flagship and well above 100 crores in the trailing 12 months. In North America in this quarter, we progressed further on strengthening the core by delivering a quarterly revenue of $229 million, which represents a 28% growth over last year. Our key asset of lanreotide has improved its market share to 20% as per IQVIA August 2023, whereas generic Revlimid performed in line with quarter 1. We continue to execute multiple work streams in albuterol, where market share has improved by 90 basis points to 12.9% compared to quarter 1 of FY2024. In our South Africa and Global Access business, we continue to outperform the market at a significant pace. We registered a solid 12% year-on-year expansion in top line led by South Africa private market, where the secondary market grew at 10% versus the market growth of 4%. Private market growth was achieved through an uptick in focused therapies in our prescription business, new launches, as well as solid performance in the OTC portfolio. Our aim is to reach the top position in the prescription business. In our South Africa OTC business, brands of Concall and Corex continue to gain market share. Concall has now captured close to 50% market share as per IQVIA MAT August 23. One of our most important focus areas in the past has been efficient capital allocation. Most recently, we announced the acquisition of Actor Pharma in South Africa. The market there is poised for growth in the OTC side, and Actor has strong OTC brands which complement the existing offerings and have potential to grow bigger, leveraging Cipla's existing marketing network. We also divested our stake from Cipla QCIL in Uganda and Saba Investment Limited for our business in Yemen. While it has helped us in de-risking our asset base, we will continue to service these markets via our B2B model. R&D investment has also been consistently increasing. In terms of pipeline for North America, we have made significant progress on clinical trials across some of our complex pipeline. We have 3 complex products undergoing clinical trials with filings targeted in FY24 and 25. Generic Symbicort being one of them, where we have successfully completed our clinical studies. Filing for this asset is planned for quarter 3 of this year. In addition, we are likely to file another generic inhalation asset shortly, where hopefully we can aim to be among the top filers. On our peptide portfolio, we plan to launch one product in quarter 4 of FY24, while there are 3-4 product launches planned in FY25. De-risking of generic Advair, a partnered inhalation asset, and generic Abraxane has been progressing as per our expectations. On the compliance front, at Long Island, New York, all our units at Invergen have recently completed their CGMP audits. While the Unit 3 inspection resulted into classification as VAI, the Unit 2 inspection has no observations by the US FDA. We received an OAI in our Indore facility, which was audited in February 2023. We have already initiated corrective measures for observations as performed 483 from the US FDA and have made satisfactory progress as on date. At Goa, the CAPA implementation and remediation exercise has completed. We will soon be submitting requisite data to enable the re-inspection. I would now like to invite Ashish to present the financial and operational performance.
Thank you, Umang, and good afternoon to all. Continuing with the strong quarter 1 performance, we progressed further with exceptional performance across core businesses with expansion and profitability. Coming to the key numbers for the quarter, we are pleased to report a quarterly revenue of 6,678 crore, highest ever in Cipla history. The overall revenue growth for the quarter was at 15% YOY. Our ex-QCIL sales stands at 6,490 crore with YOY growth of 14% and EBITDA at 1,690 crore or 26% of sales. EBITDA margins stood at record 26% for the quarter on a reported basis. As always mentioned by me, this EBITDA margin does not include other income. Calibrated price actions in core portfolio across branded and generic markets, combined with easing input cost, continued freight decline and favorable forex have contributed to improved operating profitability. One India franchise further expanded its market share by growing at healthy 10%, an exceptional performance in an acute heavy quarter, which was difficult for the industry due to inconsistent seasonality. This growth was supported by mix shifting to chronic portfolio, gross margin improvement, and new launches. North America yet again reported the highest ever revenue driven by traction in the differentiated portfolio with revenue of $229 million, growing at 28% YOY. South Africa grew by 9% YOY in local currency, powered by a solid performance in private market and OTC. Private market growth was supported by a strong secondary channel performance in oncology, CNS, and CVS, as well as the hospital segments. OTC continued to focus on big brands as well as new launches. Our free cash flow generation and operating efficiency has helped us to drive healthy net cash position. R&D investments for the quarter are at 379 crore or about 5.7% of revenue, driven by ongoing clinical trials on differentiated asset as well as other developmental efforts, higher in the quarter by 13% versus last year. Depreciation, impairment, and amortization expense includes a partial impairment of a non-operational domestic manufacturing unit, and it also includes an acquisition cost, impairment of an acquisition cost of an intangible in the form of a product in the U.S. Both these totals up to impairment of about 53 crore. The reported gross margin after materials cost stood at 65.4% for the quarter, which is 240 basis points above last year's figures, driven by overall mix change, contribution from new launches, as well as lower procurement cost on key APIs. Total expenses for the quarter include employee costs and other expenses, which stood at 2,631 crore, up by 1% on a sequential basis. Profit after tax for the quarter is at 1,131 crore, or at about 17% of sales. ETR is constant sequentially at 27.5%. As of 30th September 2023, debt primarily constitutes Rand 720 million in South Africa, with cash equivalent balance of about 6,811 crore overall, post payment of dividend in this quarter. Key focus areas and growth levers in the subsequent quarters will include the focus area for One India would be to recoup the growth in the wellness portfolio while maintaining the market-beating growth in RX and GX. In North America, our focus would be to grow the core revenue, resolve the US FDA observations, maximize our partnered launches, and also de-risk assets in order to accelerate new launches. We will continue to de-risk our key launches for FY25. Sustaining performance of Q2 for South Africa with focus on private markets and select tender business with focus on margin expansion. While margins in EMEU have been very strong, the focus of H2 would be to drive growth in top line there. Our EBITDA for the year is trending in the range of so we are increasing our guidance on EBITDA from 23%, what we had given earlier, to 23 to 24%, with bias towards the higher end. Our ROIC continues to be strong, and in this quarter, on an LTM basis, comes up to about 27%. I'd like to thank you for your attention and request the moderator to take up the questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Saion Mukherjee from Nomura Securities. Please go ahead.
Yeah, thanks for taking my question. Just my question on India, you mentioned 10% growth in India. Now, if I were to exclude the acquisition that you did, it looks like the growth is around 7%, and you mentioned trade generics growing in double digits. Does it mean that the overall prescription and the consumer business is trending around 5 to 6%? And if that's the case, what's the reason for the slowdown, and how do you see this moving forward in the second half?
So actually, Saion, the internal growth estimates for the branded prescription and the generic business are well over 11%. If you take out the acquisition, which is what you're doing, I think you have to take out from last year, we had a certain tender position in one of the products we had won, and that's basically replaced by the acquisition we've made. So core business growth, both on the RX and GX side, is close to and over 11%. So those businesses are growing stronger and much higher than market. I think on a consumer franchise, we've seen a fairly significant slowdown, more because of the weather pattern. We sell a lot of the ORS product, and I think we've not seen that level of sales of that product because of the weather pattern in quarter 2. And this result is fairly consistent with the category of beverage and with some of the other consumer products we've seen in this quarter. Having said that, I think this quarter we are looking at it bouncing back quite significantly. So no, I think the issue is the branded growth and the generic growth is very strong in the previous quarter. It's the consumer growth which had a little bit of an issue.
Okay, great. The other question I had on expenses and on the margins. So your other expenses is quite flattish quarter on quarter, despite a seasonally sort of heavy quarter in terms of revenues and also R&D cost moving higher. So is there anything there, and how should we read this going forward?
So, I think combination of two things. One is you must have noticed the improvement in your gross margin, which is flowing through to your EBITDA, and that's primarily because of the mix change that has happened in the favor of chronic in India, as well as in North America. Some of our high margin products we've been able to do better. So it's combination of these two things that led to improvement in gross margin. And there is some bit of operating leverage that exists, due to which the increase in sales, your other expenses have got absorbed. And if you're comparing to just previous quarter, the previous quarter had some recall costs sitting out there of albuterol that we had talked about, which of course is not sitting in this quarter. So that has also led to improvement if you're looking at it from quarter to quarter basis.
Overall, Sayan, I think if you were to take the employee benefit expenses and the other expenses and total it between last year and this year, we're seeing about a 11 to 11.5% increase. So, I know from our business perspective, I think that's roughly the range that we will see year on year for the expenditure to expand.
Understood. Yeah. Thanks a lot. I'll join back.
Thank you. Our next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yes, thanks for the opportunity. So just with respect to the product which you have highlighted to be launched in FY24, the peptide product, if you could share some market size or competitive scenario for that product.
I'm sorry, we can't give that detail given the competitive nature of the product.
So the market size is at least?
Well, the market size of that product could be anywhere upwards from $300 to $400 million. So I would say the available market size for us pre our entry and pre generic pricing could be somewhere in the 300 to 400 million.
And this is after some players already there in the market. And this is after some player already there in the market. Generic player already there in the market, right?
Yeah, the market is little complicated. So I think there is so there might be a player, but the market is fairly complicated.
And with respect to one comment of generic filing which Cipla is expected to do shortly, so will that be subject to litigation? Would it be more like a para IV filing?
Yes, you could expect that. Yes, it would be a para IV filing. Okay.
And lastly, considering 230 million US sales. Any ballpark range you would like to give in terms of the analyzed run rate for the US generics?
I think we are guiding to 220 to 225 as a sustainable range, at least for the next quarter going forward. And we don't know what will happen in quarter 4 because quarter 3 typically also has a little bit of buying on account of the holiday season.
And then post that you will have this peptide launch. So effectively then this run rate should ideally be much better, right?
Well, yes, depending on how the peptide will scale and whether it will, it depends on when it launches within that quarter. If it launches right at the end, then the impact will be muted. If it launches right at the beginning, then obviously, there will be a full quarter impact.
All right, sir. Thanks. Thanks for this.
Thank you.
Thank you. Our next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, sir. My first question is on our diabetes portfolio. So if you can talk about how are we placed to take the advantage of the upcoming GLP-1 opportunity? Will we be participating in both the oral and injectable form? If you can talk about the same.
Yes, I think the objective is that I think the first one that's probably going off patent is like in India is likely to be semaglutide. Liraglutide anyway is only available as an injectable. You have semaglutide and then you have dulaglutide. I think we will do sema. We definitely have plans for the oral version of the product. And if required, and based on our current understanding, if the market is there for an injectable, we will hopefully also try and introduce a product there.
Sure, sir. On this part only, so oral, do we plan to file the FTF on that side? And also, do you think this market itself for us can become like $100 million market plus over the next 5 years for us as a company?
Well, I think my answer was more for India. We can't give you a view of the US. I think semaglutide is a very exciting product, no doubt. And, depending on the number of players who come into the market, if there are multiple players on day one, then obviously the market size will reduce significantly.
Okay, sorry. Just the clarification part on this before I move to the second question. So you are only focusing on the India market, not US and the other markets for this opportunity?
No, I think we will focus on all markets, but our strategy is maybe a little different for each market. But in the US, depending on how many people are first to file, it will decide, what the competitive nature of the product will be.
Okay, but we will be also participating in US first to file market also, right?
Yes.
Sure, sir. My second question is on the one of the biosimilar product in osteoporosis. If you can talk about, I think US opportunity is coming up. So if you can talk about what is our market share in India of this product, and are we looking at the US filing of that product as well?
So which is the product you're talking about?
Teriparatide, sir.
I think what the product we sell in India for Teri is not that large. So I don't think we will provide too much commentary. In fact, I don't think it's a very large product for us in any case.
Okay.
And US pipeline, we're not providing too much color on the US pipeline right now. I think as the launches of the peptides happen, we'll be able to give you some color of that.
Sure, sir. That is it from my side. Thank you.
Thank you.
Thank you. Our next question is from the line of Kunal Damesh from Macquarie. Please go ahead.
Thank you for the opportunity and congratulations on the good set of numbers. First one on the gross margin improvement. So we have cited that there was favorable product mix, etc. But would you say that, improving U.S. generics environment was one of the key drivers in this quarter, sequential gross margin improvement?
No, so it does contribute to the improvement, but it's a mixed bag in U.S. On certain cases in U.S., we've got volume improvement. Like in case of albuterol, we've gone from 12% to about 12.9% share. On lanreotide, there has been increase in volume. And then there is price improvement in certain other products. So it's a combination of volume and price. Overall, the gross margin improvement is on account of a price, like I said, in India as well as overseas in select products. And mix has also played a role where the volume increases happen more in the high margin products.
Okay. And we have mentioned that we are getting good traction with respect to several contracts in U.S. and business development and everything is. So is that on account of a lot of shortages that you are seeing, or there is kind of pre-buying that is more driving that? What would be your assessment? So would it continue, let's say, beyond quarter 3 in your sense, or the activity is going to probably, be muted a little bit in quarter 4?
Well, I think the shortage situation until there are new capacities that come up will probably continue. And I think there's a list that the FDA puts out quite routinely about shortages in the U.S. At least for those product families, we are not seeing price erosion. But I think on the other and that's why there's a balance, because there's a fair number of products that are on the shortage list for various reasons. That there is an equal counterbalance to lesser price erosion. So yes, I think from a U.S. portfolio also, there has been some amount of margin expansion. The other thing is, I think, if you broadly look at our India business, as the ratio of chronic in our overall mix begins to increase, margins will go up in the business. Because if you look at high chronic, businesses in India, they operate at much higher margins than high acute businesses. So as your chronic mix, the last 2 to 3 quarters, we've seen our chronic mix improving because our teams are focusing in building those therapies. I think the natural impact of this is also on some amount of margin expansion.
Sure. And the second question on the generic Symbicort filing. So as a risk management, would we be filing it from multiple facilities?
Yes. The idea is to file it from multiple facilities.
And multiple facilities would be internal or?
Both would be internal. Both would be.
Okay. And just a clarification. So we said that there were 43 crore impairment and then there was some 10 crore other charge. Can you please throw some light? What was that? I just missed it.
Yeah, sure. So one is one of our domestic units where we've taken impairment, which was non-operational unit, so it was not operating since some time. So we've taken an impairment. That's a major part of the impairment. And the other one, we constantly keep testing for impairment of intangibles. So one of the products in the US which we had acquired, there we had one of the products there we have impaired the intangible that was created when we acquired that product from the partner.
Sure. Thank you. I have more questions. I'll join back the queue.
Yeah.
Thank you. Our next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi. Good afternoon and thanks for the opportunity. My first question is on your Advair and Abraxane, which you mentioned are progressing as per your expectation. So if there are no incremental query, hurdle, etc., is it safe to assume like these opportunities will likely come in first half of next fiscal?
Depends on the review cycle at the FDA. I think we would have finished the transfer process. After that, we file with the agency. Depends on the agency's view with respect to shortage in the market, with respect to competition, and the data that they see. So it's difficult to predict, but we are hoping that this comes as soon as it can.
Okay, but from your perspective, you are broadly done with the transfer process, or a lot needs to be covered?
They are ongoing still. They are still ongoing.
Still ongoing, okay. And my second question is, in the U.S. business, obviously you are seeing good pickup or good contribution from differentiated products. So can you just broadly indicate of the total U.S. sales, how much contribution are currently coming from the differentiated products, and how does the U.S. portfolio looks in terms of profitability compared to the corporate average?
So I think about over 70-75% of our pipeline in the U.S. today is differentiated. So that's a significant portion. So we've reduced the number of filings and gone on the side of differentiating our portfolio significantly.
And in terms of current profitability of the U.S. portfolio?
So I'm not sure.
EBITDA for overall U.S., if you see, right, it's above the company average EBITDA margin today.
Above the corporate average, okay. And my second question is on India business. So obviously, I guess you maintain outperformance against the broader market despite slowdown in volume. But if we see similar muted volume situation to persist in the market, how do you see your growth look for India getting impacted in near to medium term, or you remain comfortable that because of increasing chronic, you will always be growing better than the market?
No, I think in the therapies where we are strong, pediatric, respiratory, urology, anti-infective, in cardiac, we will expect to grow significantly higher than market. And I think if we are able to do that, then it's easier to show the overall growth for India. So, volume this year is also the impact of the base of the previous year. I think as that begins to even out, we will probably see an expansion in volume. See, we are gliding to our multi-year assumptions of where India will grow are somewhere around the 12-ish percentage range. On a long-term 5-year basis, we think a 12% CAGR for India is not uncommon. And actually our numbers are quite close, whether the volume is low or the price is moderated. Right? So if you really look at it, our YTD growth will be somewhere, at least in the branded prescription business, also around the 12% range. And this is happening despite volume growth being lower. There might be a year where volume growth is higher, but price growth may be lower. So overall, the 12% number will probably hold as a CAGR over the next couple of years.
Okay, so you remain comfortable with this 12% growth. My last question, if I can you comment on the U.S. pricing environment? You said you saw mixed performance across products, etc. But across the market, should we assume prices are more or less stable compared to what we saw in recent quarter, or there has been any changes?
I think pricing in the U.S. always there is some change quarter on quarter. So there will always be some depression, but I don't think we are seeing accelerated compression in pricing in the U.S. I would say more or less the trend is the same.
Okay. Thank you, Mann. Thank you.
Thank you. Our next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thanks for taking my question. Umang, in the last call, if I remember correctly, we talked about US base of about 200 and 215. And now, I think you mentioned about, 220, 225, given the, momentum that you're seeing in some of your complex products. But other than that, has anything fundamentally, changed quarter on quarter in the US? Or this is just improvement that you're seeing in the base portfolio that is, driving this, higher US guidance?
Yeah, I think, Neha, it's basically slight increase in our albuterol share, slight increase in the share of a few other product families, and also the share increase in lanreotide.
Okay. And is there scope to improve that further? So I'm just trying to understand if there's upside to this 225 number that we are mentioning.
Yes, so I think on lanreotide, specifically, we are looking at, incremental gains that we've seen historically to play out. It's never going to be a huge delta that comes in, but it would be something that creeps up over a period of time. And on albuterol is the same, right? We used to be high, then we came back down. Now we're beginning to go back up again a little bit. So it will be just that. It will be that, and then quarter on quarter buying patterns, there's always a little bit of at a 200 million base, there could be 3-4 million here there between quarters. So realistically, from the previous quarter to this year, not so much of a delta. Even though it was 215 to 230, I think, some of these share increases, some of that 3-4 million buying pattern shifts, I think you'll roughly get there.
Okay, so it's not as if we've seen a material improvement in the pricing environment or a big upside from these shortage products that's driven this?
No, not really. In fact, there's also a fair amount of demand for a set of products which I don't think the industry can supply, such as budesonide, etc., where frankly, whatever you can produce can be sold.
Understood. And Ashish, on the, margin guidance, again, we have raised the guidance. But if I still look at the first half run rate, we're, close to probably 25 versus the, guidance that we've given. Based on your commentary, everything that you've mentioned in terms of gross margins, the, India momentum, US momentum, are we expecting spend to go up? Is that the reason we're being conservative on the margin guidance, particularly given what we've seen in the first half, or is there some other dynamic that I'm missing out?
Well, I think, Neha, maybe I can add, and then Ashish can comment. I think I'm not sure we will see expenditure going up. Because expenditure between last year and this year is up 11.5% or 12%.
Yes.
I think we may see some seasonal. We do a Baroque campaign in this quarter, which will probably result in a little bit of delta, but that's not significant to the overall margin hypothesis, the expense hypothesis. I think what happens is it's in India, first of all, the margin we've probably seen in the last quarter is the highest we've ever seen in our company. And I think it's a large portion of it is due to mix. It's not so much, anything that we've in the mix, and possibly some amount of abatement in the cost of procurement. But other than that, I don't think that there's enough. So I think in this quarter, I would not be surprised in the future quarters if our margin is not at the same level that it was in the quarter that's gone by, because the mix may change of the way our business runs. The other thing is quarter four.
Sorry, Umang, to your point, because the mix in India, given a focus on chronic and, the higher investment, 75% of the pipeline being complex, the peptide launch coming up. So it's not as if the gross margin comes off from here. And if your costs are the same, leaving aside the quarter-on-quarter volatility, shouldn't this quarter's margin be sustainable?
Well, not really, because I think what we've been saying is that the sustainable margins, the way we see it in this quarter, is in the range of 24 to 25. Because if you look at the type of mix we've seen this quarter is very different, hardly any anti-infective, and we know that there is some amount of anti-infective that comes in the winter months.
Understood.
So we see a delta there. And so so that's where we think our margin will be. And quarter four is always, Neha, very, very it's a reverse seasonality quarter for us.
Yeah.
So that's, and some part of the margin will compress in that quarter as well.
Understood. Sorry, Ashish. Sorry to cut you. You were mentioning something.
No, I think Umang has covered it. I think if you look at the second half, it's a combination of quarter three, which we believe will hopefully continue to be strong as it has been. But quarter four is something that we are mindful of, and combination of the two will probably get us to about 24% overall for the year.
Understood. All right. Thank you so much.
Thank you. Our next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thank you for the opportunity, sir, and wish you and congratulations for the great set of numbers. Sir, about US business, my first question is that whether is it fair to believe that kind of a bend that you would have seen in the albuterol, possibly that is been covered by new launches like Revlimid and all. Is that the understanding right? Because in terms of the prescription, there is a more than 20% kind of decline in albuterol that we are witnessing.
So, sorry, your question is that the market share loss in albuterol, has it been made up by... So there are other products which has made up for that loss. Like we talked about, lanreotide, which has increased in volume. And there are other, the Exelant business as well, which has done very well in the first 2 quarters,
okay.
Which has helped us to get there.
Okay, sure. And sir, since we have now crossed that 12-month period for Revlimid launch, or after Revlimid launch, we have crossed that 12-month period. So generally, there was a kind of a term that in the 12-month period, the volume limit means whatever the volume that one need to achieve, that will be based on the 12-month period achievement. So from that angle, is it possible to have a sense that what is the kind of volume that we would be tracking there in US so far as Revlimid is concerned?
So for the balance of the year, H2, will more or less, like Umang talked about, quarter 2 over quarter 1 is not a material significant increase. So that trend will continue for the balance year.
Okay. So second question is about the South African market. So, in fact, in the opening remarks, you mentioned you are currently second in the private market, and which has been consistently delivering double-digit growth. And you are targeting to achieve the number 1 position there. So could you tell if that is achieved, then what would be the kind of a scenario in terms of a revenue mix the South Africa business would be having for us?
So, I think if you look at the growth in US and in India, has been fairly strong, right? And US is about 25%, roughly, I'm just talking about 25% of revenue. India is about 40-45% of the revenue. So they form a significant portion, and they're going at double digit, right? So South Africa, even at 10%, they will still be at par or, in terms of growth with them. So therefore, the share of South Africa will remain same, even if they become number 1 for us. And I think the constant focus in South Africa is also margin for us, and we want them to get to close to company average margin. Therefore, the growth out there will always be calibrated to make sure that the margin is not compromised. And that's why you've seen over last many years, the shift that has happened from tender business to private market, and now looking at OTC as another lever of profitable growth out there. and Actor Pharma that we have acquired, which comes with a portfolio, there is a huge synergy that sits out there to actually leverage our distribution network to push those products in. And the success that we've seen in Corex and Bronco is likely to get replicated in Actor Pharma. So OTC is another leg of growth, like I said, for South Africa, which will help us with both growth as well as margin.
Okay. Sir, is it possible to say that what could be the gap in terms of size, scale, between the number one player and the second player, so far as the private market is concerned?
I think we had given in the investor deck our market share.
Why don't you send it after?
Yeah, we can send it after the. Yeah. I think it's about 200 million rand in prescription. That's the gap that we have between number one and number two. So, yeah.
Okay, sure. Thank you, sir. Thanks for that. Just one last question, sir, from my side about the domestic formulation business. So from the various studies, what it is available that respiratory segment, which is generally one of our leading segment, has seen some kind of a moderation in terms of growth. Possibly it is because of the high base of the last period. And despite that, we have seen a kind of improved margin scenario, what you were mentioning about the domestic formulation business. So, is it not right that respiratory is one of the most profitable business considering our scale and the kind of end-to-end integration what we are having?
So if you look at the IQVIA data, we've actually grown faster than the market in case of respiratory and cardiac are the two, therapies where we've grown faster than the market this quarter. So not sure why you're saying that it's been subdued. And of course, like you have said, which is absolutely right, the margins in respiratory, because it's primarily in-house, is better. So we get the benefit of that.
Okay. So that means once we see the revival in the respiratory, then possibly that will support the margin profile going ahead.
Yeah, which we've already witnessed partially in this quarter and hopefully will continue in quarter three.
Sure, sir. Yes, thank you. Wish you all the best.
Ladies and gentlemen, in the interest of time and fairness to all participants, may we request all participants to limit the question to one per person to enable everyone to ask a question. Thank you. Our next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for your question. Umang, just following up on the US, I think if I remember correctly, for the last 2 quarters, you mentioned that the Revlimid sales have been broadly in line with what we were in Q4. And there is a $25-odd million, almost $25-odd million delta which you've done in the quarter versus Q4. So I just want to just double check. Is it fair to assume that all of this $24 or $25-odd million delta which has come through in versus Q4 is all on our regular business, primarily driven by the non-Revlimid business?
No, it's a combination of increase in Revlimid as well as other products as well. So, I'm referring to quarter 4 to quarter 1. So there was some increase in Revlimid as well. In quarter 1 to quarter 2, there has been, insignificant increase in the Revlimid. Yeah.
Okay. Thank you.
Thank you. Our next question is from the line of Krishnendu Saha from Quantum AMC. Please go ahead.
Hello. Hi, can you hear me?
Yes, sir. Please go ahead.
Yeah. Thanks for taking your question. Most of the questions have been answered, but just 2 follow-up questions. Albuterol, we had a market share of 16-17%, but I heard you said 12.5% or 9%. So when do we get back to that number? And number 2 on that, and another question is that The Goa plant MDI aerosol capacity increased by 200%, 128 million what I read. What is that Goa plant for which region does it actually cater to? And if you could just tell us the plants where the inhalers are filed from, so Indore, Goa, River Falls, so just you can let us know what the future filings for the FDA are from. Thanks.
Okay, I'll just take the second question first, and then maybe Umang can give some color on albuterol. So that the capacity that we're talking about in Goa, that's primarily for the international market, the EMU market, and that's where we had a increase in the capacity. On the first question on albuterol on market share, yeah.
So I think the market shifts between three versions of albuterol. We sell one of the smallest versions of albuterol. So every time the market shifts between these, that market share gets impacted. So, that range is always 2 to 3%. Now we are hoping to build our share from.
So we hope to get back to the 16-17% in the near future.
I think that, fortunately or unfortunately, is not completely in our control because the market buying behavior is dependent on which variant they keep. So in the event that they decide to keep the variant we have, obviously the share will go up. In the event they don't, then the share will only increase marginally as it has been doing.
Yes. And if you could just talk us through the plans which are for the US FDA for the filings for the inhalers.
So we have 2 inhaler plants and we are trying to file. One is in Indore and one is in the US.
Okay. Thank you.
Thank you. Our next question is from the line of Vishal Manchanda from Systematics. Please go ahead.
Hi, good evening. In the US, can you update on what's our market share in Leuprolide?
So Leuprolide, we are going to increase share now because there was price listing, etc., that needed to happen. Current market share is sub 3%. Actually, it's close to 1% right now, but it will be built up over a period of time.
So it should start ramping up as we have seen in case of Lanreotide.
Yeah, I mean the trajectories won't be similar, but yes, we will be increasing market share.
Okay. And just one more on the sub-Saharan market. Your sales have doubled on a QOQ basis. So should we assume the current quarter run rate to remain stable over the subsequent quarters? And what led to this doubling of sales on a QOQ basis?
See, I think it's a combination of Saga is a combination of South Africa, Sub-Saharan. You have CTA also sitting in that, which is our access business where the increase of sales has happened. And QCIL is also sitting there. So, the growth, we've seen some growth out there. Main growth is in QCIL, which is anyways under, sales. So, we will discontinue showing QCIL from next quarter. But of course, that is mainly tender business, so it comes at a lower margin. So, so that's how you should look at the SSA numbers.
Any broad sense on what would be a sustainable quarterly run rate for this market?
It's a very small
for the current year.
Contributor to our overall revenue. So, and of course, it's a tender dependent, so it can, be lumpy as well. So keeping that in mind, it's difficult to talk about sustainability of that. But of course, like I said, QCIL will go away from the numbers.
And what is the number that we should knock off for QCIL?
We've given those numbers in the investor deck, right?
Also press
and the press release as well. So your 6,678 crore becomes 6,490 crore after knocking off QCIL.
Got it. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, the management will be able to answer 2 more questions. our last two questions for the Q&A session. Thank you. Our next question is from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Thanks for the opportunity, sir. So, sir, this year we are launching one peptide product, and except this product, what is in the pipeline? Will you throw some light on the pipeline of the products?
I think we've mentioned that we have 4 to 5 partnered products in the peptide range, and hopefully one will launch in the next quarter, and then in the next 2 years we will launch the others.
And despite these peptides, sir, what are the other products?
Yeah, we have inhalation assets as well. We have ours, and some will be filed shortly, some are in the process of filing. And then we have some other products as well.
So in the initial commentary, sir, it was mentioned that logistic cost has improved. So would you throw some light on it? So how it will take shape in upcoming quarters?
Sure. So we monitor our air to sea mix, right, of all the products that we export out of US to our geographies internationally. So that mix, over a period of time has obviously moved in favor of sea, which has actually helped us with the reduction of overall freight. That's one factor. And the second factor is that overall, the air rate as well as sea rate both have actually come down substantially, right? On YOY basis, air rate has come down, close to 8 to 9%, and sea rate has actually come down by almost 60-70%. So those are the advantages that we're getting, and at least in near term, we are expecting this freight advantage to continue.
Thank you, sir. Thanks.
Thank you. Our last question for today is from the line of Kunal Damesh from Macquarie. Please go ahead.
Thank you for the opportunity again. So, sir, directionally, when I look at when we started the year and gave the guidance of 21 to 22% EBITDA margin, and we are currently giving guidance of 24%, and if I look at the various moving parts, the biggest delta which has come from US, right? So that kind of speaks that there is, improvement in pricing, there's improvement in volumes of existing product, but then your commentary is, mix on pricing, so can you throw some light, because, if it's just volume improvement, it might not have led to a lot of EBITDA improvement, right? Because some of these products would be low margin, and we have kind of lost market share in the high margin products on a year-on-year basis. So what explains the delta in EBITDA margin guidance improvement? Yeah.
No, so first of all, it's a combination of US and India market. It's not just the US market. I would like to just clarify that point. And in India as well, like we said, the chronic mix has gone up, right? So with the chronic mix going up, which has higher gross margin, that leads to better EBITDA margin as well. And there is some bit of operating leverage also that we're seeing in India. And likewise in US, it's certain products we have better volume, albeit, could be at with some price erosion. But there are certain products where we've taken price actions as well. So overall, these two geographies have driven the margin because they are a large portion of your business as well. And at the same time, there are other businesses where, like South Africa I talked about, where the margin improvement is clearly visible between quarter 1 and quarter 2. And hopefully that trend will continue there for 3 and 4 as well.
Sure. And let's say in the current guidance of 24%, I think what we are baking in is probably a good $220 to $225 million quarter in US in quarter 3. But let's say if the trend continues in the US, into quarter 4 as well, would it be fair to say that there could be upside to this 24%?
Yes, there could be. I mean, if the trend of buying changes, there could be an upside. But it's difficult for us to estimate that at this stage.
Right. So right now we are just building in quarter 3 because that's what we are seeing, kind of, good trends.
If the certainty of launches in the U.S. improves because of the remediation we are doing at our sites and the transfers, obviously our confidence and the margin will increase as well. So to answer your question, there are two businesses that actually 3 of our businesses are running ahead of their internal estimates, both on the top line and also on the bottom line. One is India, the second is the US, and the third is South Africa. And so there is a margin beat on account of all 3 that we have seen. And on our emerging markets business, we are running, even though we are running slightly lower than the internal estimates on top line, on bottom line we are running because of expenditure control almost to the same extent. So that is the reason that, I think the margin trajectory has improved. If you look at our costs overall, the cost basis is 11.5% over the previous year. So realistically, in our business, we never increase more than 11-12% of cost year on year. I think the real issue and the real increment we are getting is on the margin. Also, in the previous year, we had a fair amount of remediation cost built in on account of our facilities, which now is reducing because a lot of the remediation is already underway.
Sure. And sir, last, what is the PLI benefit that we would have recognized in this quarter?
Yeah, so that's part of the other operating income, and it has increased versus quarter 1. We're not giving out the specific numbers, but there is an improvement there because of the products that qualify for this thing. And yeah, and just on the OPEX part, just to complete the picture what Umang was saying, I think with de-risking that's happening in the US, there could be marginal increase in the OPEX as well in the coming quarters.
Sure. Thank you, sir.
Thank you. Ladies and gentlemen, that brings us to the end of the Q&A session. I would now like to hand the conference over to Mr. Ajinkya Pandharkar for closing comments.
Thank you for joining in. If you have any questions, please email us on investor.relations@cipla.com. Thank you once again and have a very good evening.
Thank you. On behalf of Cipla Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.